Have you ever tried to lose weight and the first 5, 10 pounds just went away like that? And then all of a sudden you just hit a wall and it wouldn't move no matter what you do. So it took extremely a lot more effort to lose those last few pounds. That's basically where we're seeing right now on the inflation for the US right now. We had the inflation number just being sticky as all get out. So in today's report, we're going to go over the one number, the main number that the Federal Reserve watches when it comes to inflation numbers, and that's the PCE. So that's a report we're going to do today. So mortgage rates eased a little bit yesterday based on some of the economic news, but today the news even got, I'll say, a little bit better. Let's get over to the headlines that we see. So we have right here on Friday that we have the core PCE price index month over month and year over year. So the first thing you got to figure out is, what is this thing? What's the PCE? Well, it's basically, if you go down through here, here's what it is. Let me see if I can zoom this in just a little bit. Okay, so the core PCE consumption index measures the change in the price of goods and services purchased by consumers from the purpose of consumption, excluding food and energy, kind of like the CPI. Then it says right through here, unlike the fixed weighted CPI, the PCE is chain weighted and adjusts through time. So I'll explain that to you in a second. But what I want you to understand is, let's get over to CNBC so they can explain this. But here's what the headlines say right now. Fed's preferred inflation measure rose 0.2 in April, as expected. So let's get right over to CNBC. Let's go through this. And like usual, we're going to go through this. Then I'll put it in basic terms that you and I can understand and give you an idea what's going to happen in the markets today. So without further ado, take it away, CNBC.
Steve Leisman, he has those numbers. Steve.
Yeah, it looks like personal income coming in at on target at 0.3% versus March, which was not revised down. I expected it would be, but came in at 0.5 as previously pointed out. Overall PCE price index at 0.3. That is spot on with the prior month and spot on with expectations. And the core, the key one here, coming in at 0.2%. Again, according to expectations. I told you that the economists have figured out how to do this and how to come up with a decent number relative to the actual number, and they are spot on. March not revised, 0.3%. Okay, year over year, price index 2.7, in line with the expectation, in line with the prior month at 2.7. The core, however, looks like it is a tick higher. I'm not sure if that's due to rounding, guys, but the core at 2.8% versus the prior. So no improvement in the core, no improvement in the year over year. I'm guessing, I can't calculate this on the fly, that maybe the 3-month annualized or 6-month annualized is a little bit better. Let's see how the market is responding to this. A little bit down in the 2-year note. It had been at 494. It's now 491. Looking at the 10-year, 453. And I have here what it was. It had been at just down one tick. And I'll take a look at the Fed Fund futures for a second here. That'll tell you really not much change here. Still at 12% for July. Call it 51% for September. Guys, the story here has been the market has really baked out almost really 2 cuts this year. Now it looks like it's comfortable with just 1.5 is really where it's at for the full year. This is a market that earlier had been forecasting 6 rate cuts, now down to holding on to 1 and getting rid of 2 here. So pretty much in line. This idea, I think, that we had this spike in January through March and it seems to have eased off, I think, is a story that remains intact.
Yes.
The idea, I think, that we'll
keep it at that. So let's put this all into context. Okay, let's go over to here. Here's what the PCE, here's what they're talking about. But let me explain to you what the PCE is. So I just did a chat GPT and asked them this questions right through here. What does this mean? PCE chain weighted versus how the CPI is factored in. So let me go through here. I'm going to put on my glasses here in a second. I want you guys to understand this because it's important why, Fed officials are looking at the PCE versus the CPI and the differences between those two inflationary numbers. So let's go through here. Breaking down the concept, the PCE, personal consumption expenditure. The PCE index measures the average increase in prices for a domestic personal consumption. It is a broad measure of inflation within the economy, focusing on goods and services consumed by the households. It is published by the Bureau of Economic Analysis and so forth. Chain-weighted index. A chain-weighted index, okay, this is where it starts to get gives us the differences between the two. A chain-weighted index, also known as the chain index, uses a method of calculating the updates of the basket of goods and services periodically. Unlike a fixed weighted index, which uses a constant set of weights based on specific base year, a chain weighted index continually adjusts the weight to reflect changes in consumption. Here's basically just a good analogy that they're saying through here. Example: suppose in year one, consumers primarily bought DVDs for a few streaming services. But by year 5, most of the consumers switched away from switched to streaming services, and got away from DVDs. So why would you continue to monitor the sales of DVDs? So that's what the CPI does versus the PCE. So if you're getting confused, it's all inflationary data. Okay, so that's what's going on. But let's take a quick economic view of what happened so far this week in the economy. Monday was a holiday. Tuesday, consumer confidence, it was up from 97 to 102. That caused the market some havoc. They were saying, okay, now the consumer is going to start spending again, and everything's going to go out of control. So you had a huge jump in rates. And then all of a sudden, the GDP came in on Thursday. It was 3.4 to 1.3. It's saying the country's production is going way down. Jobless claims, they're staying steady, but this isn't helping the Fed's piece of view, but this number isn't going way down or way up. So it's kind of good there. And then we had the PCE numbers coming in today, and they both were basically completely in line to what was expected. The month over month went from 0.3 to 0.2. So there was a little better off right there. So that's basically what's going on right now with that. Stock market, how's the stock market reaction to this? Let's scroll up to here. Dow Jones is up. S&P's up, and the NASDAQ just flipped over to negative territories. Cryptocurrencies, Bitcoin's down just a hair. And let's look over at oil. Oil is up just a hair as well, but we're still under that $80 a barrel trigger that we're looking at. So now let's go over to Steve Leisman said something about, well, there's a 12% chance that rates will be cut and so forth. Here's what he's talking about. There's a Fed meeting coming up, and it's in 12 days. Okay, if you want to check out what the probabilities are that the Federal Reserve is going to cut rates, just go to the CME Fed Watch tool. Okay, what this is if you scroll down, it's basically saying, what's the likelihood the Federal Reserve is going to change the federal funds rate, the rate that they control, okay, at the next few meetings, or at least this meeting. So you go down through here, the probability is basically none. There's 99% probability that they're not going to change. Down through here, this is basically what the federal funds rate is right now, the range. We're about 5.35 right now, so it stays in that range. But if you go through here, you can also look at the probability. Now, here's what he was talking about. If you click this and you go through here, you're going to see what the probabilities are of them, or what they're going to do at the next few meetings. So you go through here and it's saying, well, in the June meeting, they're not going to do anything. We just looked at this one. Okay. Now at the July meeting, there's an 86% chance they're not going to do anything. And then the August meeting, that's when everything starts to kind of skew. So if they're going to cut, they're going to cut, maybe 1 or 2 of these meetings right through here. It's quite a ways out. We do have a lot of data coming in between now and then. So, time's going to tell. So that's that piece of it. But I want to also talk to you guys about, here's the 2 main questions I get. Dan, what's going to go on with interest rates? And can I afford that? So we created this tool. I don't know if you guys are aware of it, but if you go on in the description down below, you can subscribe to this thing. It's less than $20, especially if you use the code Dan. You use my name, Dan, in the promo code, you're going to get a discount. Here's a really cool tool we put together. How much can you really afford? Okay, so this analysis is, there's a lot of tools out there that says, how much is the payments going to be and so forth, but not a lot of tools say, okay, here's exactly, all the basically dynamics you're going to need to look at when you're looking at, possibly what your future house payment would be. So if you click that link down below, here's what's basically going to pop up. And it looks simple, but it's more complex than you think. So you go down through here and you can actually put in a lot of the data. What I tell people to do is, go off and pull your credit to make sure you know what your creditors are and what the balances are. You might even be surprised. I also have a link down below. It's IDIQ. Check it out. It'll give you your FICO credit score. It'll do monitoring. It'll do a whole bunch of things for you. That's down below. But once you get that, now you know your scores, and now you know the other debt that you have. So you're going to start plugging that data in here if you want. So you're going to go through here, and this one, the only thing I would change in here is change the rate to about 7.25 if you have anything different. Keep in the down payment at between 3 and 3.5. I'll put it this way. If your credit score is over 700, put in 3 in here. If it's under 700, put 3.5%. Okay, and I'll explain the differences there in a second. Then you're going to put in the rest of the information. Now here's what it's going to ask you. It's going to say, how much do you make? Okay, you're going to put that in. Then it's going to say, what are your debts? Well, you're going to take from the credit report you have, and you're going to put in your debts. Okay, do you have a cosigner? Well, if you do, put in their information as well, right here. Now, here's where the magic starts. You go to the next tab, and it's going to tell you a whole bunch of things. Okay, this tells you more than you actually kind of need to know, maybe, but it's going to say, okay, based on this information, you can actually afford that kind of payment. That's your down payment, and here's what your estimated closing costs are. Okay, you're going to go down through here, and it's going to tell you, okay, here's different mortgage models or mortgage options that you would qualify for. It's going to go from safe, meaning, you don't really want to go out on a limb at all the way up to basically you getting qualified for an FHA loan that'll go to a 57% debt ratio. It's not, I didn't make the guidelines, folks. It's just, that's the reality. So if you go all the way down through here, it says safely, you can buy this, conservatively, you can buy this, moderately, you can buy this, aggressively here, and so forth. You get it. And here's what the payment would be. Then you scroll down, it's going to give you, okay, say different mortgage options that you can go through and the definitions there. It's also going to go down through here and tell you the breakdown of what your payment would be. It's also going to say, based on where you're living, here's some other expenses that you're going to incur because you own a house. And there's what the payments are going to be, how much you're going to need for your down payment, closing costs, and so forth. It breaks it down for you, and just a bunch of other different pieces of information right through here. It also, you can manipulate this to say, okay, if I had a little bit more income, or if I paid off that debt, what can my mortgage payment be? And it gives you a bunch of terms and definitions and everything else. So there's a lot packed in this program. I'd highly suggest you reaching out and checking out that product. But let's get back to the report that we have. So based so far today, what the market's doing, well, you go right up through here and it's not doing bad. We have the MBS market up 20. Let's go over the last 2 days. Hold on. Let's see the nice moves we had in the last 2 days. That is the last 2 days. So how mortgage rates are basically how we figure this out, what the price of a mortgage bond is doing, because the yield on this thing, the mortgage bond, the MBS, is the biggest component of your mortgage rate. When this number, the price of this bond goes up, that's great news. That means the rates are coming down. Okay, so we went basically from here, from yesterday, beginning of yesterday, up to here. Might not seem like a big move, but we're also seeing mortgage rates coming down. So yesterday we dropped down about 0.05. I'm expecting to drop down probably to 7.2 today, probably shave off another 0.9. And it's nothing to write home about, but at least we're going in kind of the right direction right now. So if you're out there and you're like, hey, Dan, I need help. You might need a reverse mortgage. You might have a family member, a neighbor, an aunt, uncle, mom, dad that needs a reverse mortgage. Let me know. I'd love to help you with that. I specialize in reverse mortgages, and I can help you through that. But if you're also looking to maybe buy your first house, buy an investment property, refinance. We talked about that yesterday on an event that we did, how you can refinance. We'd love to help you. Okay, my name is Dan Frio. I'm a mortgage loan officer. I'm licensed in all 50 states as well as Puerto Rico. I'd love to help you. I'm also a mortgage broker. I'm set up with 33 companies right now. So what that means is by going through me, is basically you're applying at 33 different companies, but it's one application, one credit pool. The first thing I want you to do, the first thing of anything, is I want to see if you can get a grant if you're looking to buy your first house, okay? The grant right there, it's a grant finder, fantastic tool. Go through it. It'll take you probably 3 minutes to complete. It's going to see if you're eligible for grants up to $7,500 that don't need to be paid back. Okay, that's the first thing. If that didn't work and you still want to apply, go ahead. It's right through there. Hit the apply now button. What's going to happen is you're going to fill out an application. We're going to then reach out to you within 24 hours, go over any and all questions that you have to make sure you're comfortable. And then we're going to work with you to take you basically from the dream of home ownership to the day that you get the keys in your pockets. So thanks so much for watching, guys. God bless. Have a fantastic weekend. If you'd like to reach out to us directly, just scroll down to the bottom of the rate update, and you're going to see our 800 number as well as my email address right there. Take care, folks. Be safe today, and I hope to see you back here on Monday. Bye-bye.